1 we shall explore our topic. The 2008 global financial crisis, causes, global impact, and influence on literature. Introduction. The 2008 global financial crisis was one of the most severe economic downturns since the Great Depression of 1929. Triggered primarily by the collapse of the U.S. housing bubble, the crisis led to widespread economic distress, banking failures, and government bailouts across the world. The economic turmoil affected major global economies, including the United States, the United Kingdom, Germany, Italy, France, Russia, China, India, Japan, Spain, and Turkey. We will explore the causes of the crisis, its economic consequences across different nations, and its influence on literature. Additionally, it examines how the crisis influenced global economic policies and financial regulations. Causes of the 2008 global financial crisis. 1. The U.S. housing bubble and subprime mortgage crisis. The root cause of the crisis was the housing bubble in the United States. Banks issued subprime mortgages, high-risk loans given to borrowers with poor credit histories. Financial institutions repackaged these loans into mortgage-backed securities and sold them to investors worldwide. 2. Deregulation and risky financial practices. The deregulation of financial markets, particularly in the 1990s and early 2000s, allowed banks to take excessive risks. Financial institutions engaged in speculative trading with complex financial instruments like collateralized debt obligations and credit default swaps, creating an unstable system. 3. Failure of credit rating agencies. Credit rating agencies gave high ratings to risky securities, misleading investors into believing they were safe investments. When the housing market collapsed, these securities lost value, causing widespread panic. 4. The collapse of Lehman Brothers and financial panic. In September 2008, Lehman Brothers, one of the largest investment banks in the world, declared bankruptcy, triggering a massive sell-off in financial markets and causing widespread panic among banks and investors. 5. Globalization and financial interconnectedness. The global nature of financial markets meant that the crisis quickly spread to Europe, Asia, and other parts of the world. Countries heavily invested in U.S. securities faced massive losses, leading to an international economic downturn. Impact on different countries and regions. 1. United States. The U.S. economy experienced its worst recession since the Great Depression. Unemployment soared, housing prices collapsed, and millions of Americans lost their homes. The U.S. government responded with bailouts for major banks and corporations through the Troubled Asset Relief Program. The crisis also led to the collapse of major financial institutions such as Bear Stearns and AIG, prompting regulatory changes like the Dodd-Frank Act to prevent future crises. 2. United Kingdom. The UK was heavily impacted due to its financial ties with the US. Major banks such as Royal Bank of Scotland and Lloyds Banking Group required government bailouts. The economic crisis led to austerity measures and public spending cuts, triggering protests and political instability. Additionally, the British housing market suffered from declining property values, reducing household wealth. 3. Germany. As Europe's largest economy, Germany experienced an initial downturn but recovered relatively quickly due to strong manufacturing and export sectors. However, German banks such as Hypo Real Estate faced liquidity problems and required state intervention. The German government implemented stimulus measures, including an economic recovery package of €50 billion, to support industries and prevent mass layoffs. 4. Italy. Italy, already struggling with economic stagnation, saw increased debt levels and financial instability. The crisis led to rising unemployment and social unrest, further weakening its economic standing. The Italian banking system faced stress, particularly Unicredit, which had exposure to toxic assets.
Looking for a ripper,
Italy's
Doc.
public debt to
Know where I can
GDP
find-
ratio also
Who's
rose
asked?
sharply, exacerbating long-term economic challenges.
Got a problem with an implant.
5. France.
Not from around here.
France faced
Couldn't find
economic
enough.
contraction and
Bird fingers
declining
was the
consumer
best.
confidence.
Yeah.
The government
The best.
implemented stimulus measures to support
And
businesses
escorts.
and prevent further
For special
economic
tastes.
decline.
Looking for a ripper who can
Major
cater to
French
my
banks,
special
such as
needs.
Société Générale and BNP Paribas,
Fingers will
faced
like you.
difficulties due to exposure to U.S. mortgage-backed securities, but state intervention helped stabilize the financial sector. 6. Russia. Russia's economy, heavily reliant on oil and commodity exports, suffered as global demand declined.
Financial claim? Take it to
The
court.
Russian stock market lost more than 70% of its value in 2008, and the government had to intervene by injecting liquidity into banks. Major corporations, including Gazprom and Rosneft, faced revenue losses as oil prices plummeted. 7. China. China was less affected than Western economies due to strict financial regulations and state-controlled banks. However, exports declined as global demand shrank, prompting China to launch a massive $586 billion stimulus package to sustain growth. This helped prevent widespread unemployment and maintained economic stability. 8. India.
Come on. Let's
India's
go.
economy remained resilient due to strong domestic demand and regulated banking practices.
Think he's done.
However, foreign investment slowed, and stock markets experienced volatility. The Indian government implemented monetary policy adjustments, including interest rate cuts, to ensure financial stability and support economic growth. 9. Japan. Japan, still recovering from its 1990s economic stagnation, saw further economic contraction. The crisis hurt its export-driven economy, particularly in the automobile and electronics sectors. Companies such as Toyota and Sony reported declining profits, leading to job losses and reduced industrial output. 10. Spain. Spain suffered a severe economic collapse due to a real estate bubble similar to the U.S. The banking system required bailouts, and unemployment rose sharply, particularly among young people. Bankia, a major Spanish financial institution, was nationalized to prevent collapse, while the government implemented structural reforms to stabilize the economy. 11. Turkey. Turkey experienced financial stress as foreign capital inflows decreased.
And let
The
it go
crisis
back to
led to a
clouds.
weakened currency and economic slowdown, forcing the government to implement stabilization
You two
measures.
Got along swimmingly.
Turkish banks, however, were relatively insulated due to strict banking regulations, preventing a full-scale financial meltdown. Impact on literature and cultural
Need to
expression.
figure out-
The 2008 global financial crisis profoundly influenced literature, giving rise to themes of economic despair, inequality, and corporate greed. 1. Depiction of economic collapse and social unrest. Writers explored the struggles of middle-class families, laid-off workers, and struggling businesses. Novels such as Capital by John Lanchester and The Financial Lives of the Poets by Jess Walter captured the personal effects of the financial meltdown. 2. Critique of corporate greed and financial corruption. Many literary works criticized corporate greed and unethical financial practices.
I'll come back some other
Books like
time.
Michael Lewis' The Big Short
Betting on it.
provided an inside look into the reckless behavior that led to the crisis. 3. The rise of economic dystopian literature. Economic instability influenced dystopian literature, with authors envisioning
anything that might
societies
interest
ravaged
me?
by financial collapse. This theme appeared in novels exploring income inequality, corporate dominance, and societal breakdown. 4. Influence on cinema and popular culture. Films such as Inside Job and The Wolf of Wall Street provided cinematic portrayals of the financial crisis and its underlying causes. Conclusion. The 2008 global financial crisis exposed the vulnerabilities of deregulated financial markets and excessive risk-taking. The crisis influenced literature, cinema, and cultural narratives, shaping discussions on financial ethics, inequality, and corporate responsibility. The reforms that followed have aimed to create a more stable financial system, though debates continue on the effectiveness of these measures in preventing future crises. Thanks for watching and please subscribe
Stab.
for more
Gotta
contents
be.
like this.
No one else with that kind of fashion sense. Ordered recently. Christ, it's hot. Thermal readings are off the charts.
Keep looking.
Electric corp patch on the coveralls. Coveralls had a patch on them. Electric corp.
Could be a costume. A prop?
Factory worker fetish? Hard as hell to believe.
It'd explain the higher thermal readings, too. You could be onto something.
Can't beat that rich synth cough aroma. Cheap shit. Cold, too. Buck a slice. Coffee was cold. Like, from the day before. Pizza looked fresh, though.
So?
Means someone's grabbing buck a slice regularly. Which is not something one does for the flavor and fresh ingredients. Pizza shares its DNA with styrofoam. Nobody's gonna schlep across town for it. Okay. We're looking for an electric corp power plant located near a buck a slice.
EC used to have a big old complex in Charter Hill. Buck a Slice checks out too. How can you be sure though?
Here we go. Old electric corp power plant in Charter Hill. Gotta make do with that for now. Nothing else to garner from this sport.